And what I'm going to show you today is an invitation to high probability trading and investing. I'll show you systematics and things that every trader or investor should have in the portfolio to be successful long-term in trading or investing. Trading or investing, we differentiate basically by the means of time, and we'll go into details. And at the end, I'll also show you a lot of examples. But I encourage you to not go and say, I get a recording, and you go through the video again, take the education, take some notes. It'll be very fruitful for you, what I share here, because it can change your life as a trader, making you independent. And we are in business since 2008 in the trading education business, and we made many traders independent and many investors as well, helping them to find good situations where they can move ahead with what they want to do in life and what they want to do through trading. Before we get there, little disclaimer, there's a risk in trading, and we are here as educators, not as broker dealers or financial advisors. So we share what we do, how we go to market, and what our systems provide to you. When you're trading, you're basically doing one thing, you're predicting the future. And you're predicting the future if there is a price move to the upside or to the downside. And the key will be with which probability can you do that? Yeah, we all work as traders with uncertainty, predicting the future under those circumstances, and so we'll have to use a system and the systematic to be more on the right side of a trade than on the wrong side of a trade. And the question will be, how good are you today? Because you're here, you most likely want to learn to trade, and depending of how far you are, because many say, okay, it's a 50-50 chance. No, it's not. If you don't do it right, it's really, the odds are not in your favor. If you take 50-50 chance, yeah, you already have an opportunity to participate without losing everything in the account. But the key will be to get above 65% predictability, because then you are in the right business for making money long term. And to do so, there's a couple of things to consider. What's a price move composed of? Yeah, when you look at the composition of a price move, and I did a little drawing for you. First of all, it's a distance. There's rarely a price move that goes forever. Prices move and they retrace, reverse, or halter, and then they move again or reverse. And at entry, where you need to have a system or systematic to help you to decide how far will that price move go, and on the other hand, how much time shall it take to get there? When you combine those two components, you have a big advantage, because you can do the right thing more often, get out of one asset into the next that has that component of the right distance and time, and it takes away the uncertainty that all of us are dealing with when we trade, because at entry, we don't know if our prediction will be right. But if you have a system and a systematic that tells you more than 65% of the time I'm on the right side of the trade than on the wrong side, then I have an edge, because emotions come in. And that's a big thing. Yeah, so surely we all say, yeah, look, we don't get disturbed on trading, but that's not the case. We all come with a baggage of emotions and deal with uncertainty. Yeah. So what comes up with uncertainty? Fear, anger, sadness, surprise. All of these components slowly let us not see the same, because our brain sees, not our eyes. And with our history, we often don't see the same if we are not educated to look at the chart the right way and manner, or have a system that spells out the opportunity for us. And this is where also expertise, experience, and skill comes in. Trading needs all of those components, and I later on prepared a little chart for you of what needs to come together so that you have an edge long-term, staying in that business and making money out of it and being independent. Look, trading and investing is the most wonderful business in the world, because it needs no clients. It has no collection, so you pay yourself. Yeah, and you can do it from any place in the world, from the comfort of your home, but it needs a change of attitude, preparation, systematic systems. All of that needs to come together so that you are a good trader or investor. And I invite you in through all the different steps, and also make you an offer for our systems. But I also focus today very deep into these educational parts, so that you take away value, whatever you decide you want to do with that. So how to master them, and all these components, emotions, our brain, our history, and all of that disturbs to make sound decisions, and that's often the case. So you need to trade rule-based, clear-cut rules. What does it mean? So at that situation I enter, this is where I put my stop or adjustment level, this is how far I predict the price move to happen, and this is how I act on it. So we take approaches to trading as mechanical as possible. As less room for interpretation you leave for yourself, as more as you follow your rules, as a better trader you want to be. And control risk. Look, under any situation where we predict the future price move, we don't know if it's going to happen, but we can control the risk we take in an individual trade, and we can control our money management. And I'll give you some advice of how to do so that not one single trade can hurt your position that much that you can't be continuing trading after. And compounding interest. So what's that to do with it? Look, if you have a systematic that helps you to invest, see the price move, how it happens, get out before it ends, and invest into the next, then you have always at every trade a little more money on hand. And then afterwards you can put that money into the market and compound interest, and it will be doing wonderful for you if you stick to the rules. Easier said than done, yeah? Because risk has to be limited. To limit risk, you will need to understand at any situation that there is no risk-free trade. Yeah, we assume that you often have to have a one-to-one risk to reward, at some instances even 1 to 1.2. Why is that? You have to stay out of the natural volatility, the statistical volatility of an asset. If you don't do that, then you get stopped all the time. Yeah, because you say, I take very, very little risk, and I zoom for the skies. So, but bang, you get taken out, taken out, taken out. After 10 times that happens to you on trade number 11, it zooms to the skies, but you're no more the same person, and you're no more in that trade. And we try to prevent that within giving pressure points where there is a lot of pressure resulting the change in supply and demand, and have a system portraying those on the charts for you. Yeah, but take that mental note. There is no risk-free trade. If you risk too little, you'll be taken out and not participate. If you risk too much, then the trade is not worthwhile to do. What's too much? Everything about 1.2 times above the reward that you have. I'm not saying you always have to take that high risk, but your systematic should give you a maximum risk that you can take for any trade when you know how far the trade shall reach. And the idea of trades reach into the skies, I'll show you that often doesn't happen if you trade meaningful, and how you can cope with it. Yeah, and so therefore we say also money management at the beginning, if you're not so certain, but also for traders who know what to do, balance your risk to no more than 2% of your portfolio, so that not one single trade can hurt you with more than 2% of your holdings, because you need some time to get it right. And so that gives it to you. If you risk 10% and you get a couple of 5 trades wrong, then you have only 50%, and you need to make 100% of your holdings to come back to break even. That's not a good idea. Yeah. So let's look at some market realities of why I'm saying that, and how we can balance and work with those realities in our favor. Yeah, 85% of all financial transactions go through institutional investors. Yeah, they rebalance. Take that point. They rebalance the inventory on the way up and on the way down. I'll show you an up example later. And thus, price moves are not steady. You have a move, a retracement, or yeah, and then another up move. But when you know how that happens, when you have a system and systematic that helps you on this, then you can participate in the markets, and you could know the one doesn't move for you, you take your money out, put it into the next, and in the next, and in the next. And you compound your interest when you made money. That helps you. So I did a little drawing here for you. And what you see is on the curve, yeah, we have here the initiation phase. So some pro traders initiate a demand, yeah, and it's visible to others. And so followers buy into the demand, and that's what we also do. But we'll portray how far the move will reach, and that's often where the mistake happens, because then right on the way up, there is a retracement taking everybody out, and then the pros sell to the market again at higher prices. If you want to prevent that, you'll need to have a system and the systematic helping you. And we're going to guide you to today having such on hand and following it. Yeah, because you know, see here, often we say, wow, look, I want to have a 2-to-1 risk-reward ratio. And so therefore I risk 1 to make 2, and if I can do that even at 50%, I'm supposed to make money. Yeah, the unfortunate situation is that's a nice theoretical approach. When we see how the market reality comes in, yeah, prices then move, retrace. You are right in your prediction. The price moved all the way up there where it was supposed to be, but in between you will stop because it comes back. Because price is not a variable, it's a result of an underlying change in supply and demand. However, this can be measured. We can measure this like in a seismic measure, where you see certain elements and certain changes happen before the big eruption happens, and that's what we do, to put that on a chart for you to help you finding those instances and define at entry. Yes, so this is a good trade in that direction, or positive above 65%, because you can't make it 100, has a certain distance we portray it for. Yeah, how much eruption do we get? Number 8, or number 6 or number 5 earthquake. Yeah, what time will it be? Yeah, for how much time do we want to be in a trade? And if it doesn't happen, what do we do? Close the trade. And I show you a system that does that very systematic over and over. And then we have a stop or adjustment level. What's an adjustment level? Look, our name NeverLoss trading doesn't mean you never lose a trade. That's not what we want to portray. We came from the idea that you can repair trades. Never stop loss trading was a bit lengthy, and so therefore we work a lot with adjustment to keep losers small and let winners run. Yeah, and then you have a probability. We want you to figure out at entry what is the probability for your success at that trade, because it can't be 100%, would be too easy. And then you have a position sizing model that we work with you, or you should have one where you say, look, if things are in my favor and I stick to my maximum risk guideline, I'm supposed to invest at that point this much and no more to be in that position. And if you say, look, all these big stocks like Apple or Amazon, they have a very high price, how can I be in them? Pretty easy. You can do small investments by trading options, and we are helping people to do option trading strategies. And surely you can work with a leveraged product like futures, like the ES or the CN, yeah, the 10-year notes, or the Canadian dollars, and you can even do long-term trades with them. For a Canadian dollar or a 10-year note, you only need to have $1,200 in your bank account, and you can participate greatly in their moves. But all of this is skill, as I laid it out, and knowledge that we help you together and to be having an edge. Yeah, because trading with an edge needs preparation, effort, structure, and all of that, and we invested the time over very, very many years, but we're also very well documented in what we do, and we help you to be part of that if you want to do this. Yeah, and so here what I show you today is one of our systems called trend catching. The idea is a trend runs from the beginning to the end. No, that's not the idea. It'll do it, but we'll say, as I showed you, nothing goes continuous or continued. So we'll say, okay, how can we partake in that with risking always a meaningful risk, knowing and trading when our reward risk is in balance, and moving through many iterations, so having many opportunities for different kind of assets in their stage and development, to the upside, to the downside. And if you ask yourself, how do I do a downside trade when I have an IRA? We'll show you how you can do it with a fraction of investment through options, for example. Yeah, and also if you want to trade both sides with very easy access, you have either Forex or futures, and we'll teach those greatly to you. Now I'll give you some examples tonight, or this afternoon, I'd say, where we're going to go through and how it works. So what we do is we have the SPU measure. The SPU measure, speed unit, measures the distance a price move shall conclude with a high probability from a certain entry point. And on the other hand, we measure time, in which way we say, with that system that I'm going to show you, we want to be 3, maximum 4 bars. What's the max principle? If at bar number 3 there is another signal we get out, but also we can potentially add a bar number 4, but we do it very easy here. We'll go bar number 3 exit in all the examples that I take, and I recorded some. So with that, we operate on high probability setup, 65% or better. From past experience, we work and help you having a business plan for trading success, which includes a financial plan and also an action plan, which helps you to prepare and then helps you to formalize your expectations, and we teach one-on-one only. Yeah, why do we do that? Because it's hard to learn in a class of 20. The one wants to do futures, the next wants to do this. So we focus on your specific wants and needs and your best learning time, days and hours, and then come together. We could do much better or teach more people if we expanded our classes, but we saw one thing with the individual training. We are making people happy, focusing on your personal wants and needs. So with that said, let's get some examples of how that can look on the chart and how we can help you finding those trade situations. And what you see here is a daily chart for Amazon. I'll show sub-day time frames and long-term charts, but we always operate, say, look, what did we say? We want to be in a trade for 3 days here because we have 3 bars. That's what we want to be in it. And we want to be in it for a certain distance. So well, how does the chart tell us what to do? So you see here, there's these points on certain of those elements. They are specifying how far we assume that price move shall reach. However, there is an entry condition. The entry condition says here buy above 1112.70 cents, and if the price of the next candle doesn't get there, you don't want it. So you see here, for example, at that one, there was one signal, but the bar, the next candle didn't take it out, so therefore there was no need. But now we play our 3 candle rule, candle number 1, candle number 2, candle number 3. Did we reach our first goal? No. But at candle number 3, we go out. Did we make a profit? Yeah. Was it meaningful risk reward? Absolutely. Yeah. And so this is how we repeat it. So here, did the price go higher? Yes, but we don't care. We moved our money out into the next trade, compounding interest. Yeah. And you see here, that was a scratch trade on this one. And then on the last trade, we just hit it. Yeah. And this is how we continuously help you to find the opportunities on the chart and to move yourself ahead from one asset to the other. Because when you see what we did here, in a matter of the last couple of days, we had 4 winning trades. Yeah, the line shows you where we exited on Amazon and 1 scratch trade. So that's high probability trading. We had no loss, but also losses occur. So I can't promise you that everything is 100%. But I did one thing. I took this asset, Amazon, and said, let's go through, because you know, if I go to the next, it might just portray the same thing. But there I said, let's do Amazon on different time frames. And that's what we're going to do now. We say, okay, I'm a long-term investor. I want to buy and hold a little longer. How can a system like this help me to do so? So what you see here is the Amazon monthly chart. So, wow, what is this? What do I see here on the chart? So every bar is a month. And you see here again, there was a buy signal. Let me highlight them for you a little. Yeah. So there you had your buy signal and you had your expectation. After 3 bars in the trade, 1, 2, 3, I want to be at target. And what happened at target? What we expect, yeah? You saw the curve that I said, institutional investors will make one of those and take you out. Yeah, so we would have lost all we invested, because imagine this one came and took our stop. But what did we do then? We re-entered the position on the monthly, saying, okay, if Amazon surpasses this, in 3 bars I want to be at that target. After 2 bars I was there. All right, we did. And then we had another trade. Yeah. Ooh, it was a little bit under danger, but you see here that red crossbar, that is our stop or adjustment level. So that wasn't infringed. This stick didn't go lower. And one thing happened. The moment we reached our goal, then the price retraced. Yeah, and you see then we had this big bar, and the risk reward is not totally in order, but we then trade with an option strategy, still participating and getting out, making money on the upside with those trades. Yeah, so you see continuously we started with a daily chart. Now I moved yourself into a monthly chart for longer term investing, and let's pick a weekly chart. Yeah, Amazon, same thing. Say, okay, how does it all work out on a weekly development? Does it show the same? So, or the SPY I took here for weekly. Yeah. So for SPY chart, and I come back to Amazon too. So see here, overall market, does it do the same? Absolutely. You had here your buy, and you had your out in here. Yeah, and so if you have a continuous signal, then you can trade it. So did we get there? Yes. Did we get there? Let's take a couple of more examples on. Yeah. So now SPY monthly chart. What's that telling you? Yeah. Get in, and continue getting in, and compound interest. So the money you made, imagine you learn option trading, the money you made, you reinvest, and you take a limited, clear-cut, meaningful risk, and you trade at key entry and exit points. And here's the Amazon weekly chart, and it shows you one thing: at weeks where we had ambiguity, so nothing happened, you had no trade. But then when the trades happened, here you had your stop, here you had your in, here you had your out. Did it go higher? Yes, it did go higher, but we couldn't participate. We could participate in it. There you had again a winning strategy, and there you had again a winning strategy, and now we would be basically on an open trade. Yeah. So then day trading. Let's go and see some day trading examples. How would you analyze today's chart on Amazon? Yeah, you give me, I'll get back to you with that in a sec. So I keep on with this, and I pack that on to the back end of the presentation. Yeah, so I'm not gonna forget your question on Amazon. Yeah, and so here's the ES trading opportunity chart, and it is for December 15 and 18 and 19. So I recorded it just the other day saying, okay, how did the system participate in those trading opportunities, and what are we trading for here? Here we're trading for a consecutive 20-tick move. Yeah, and you saw winning trade, winning trade, winning trade. How did it compose a winning trade? So look here, it told you, please buy if the next candle goes higher than 2,671 and 50. It did, and exit here. Yeah. So then, how much do you make? Because one tick you get in, so you make 19 ticks. That's not a bad trade, oh? And here again, you do the same, and you woke up happy because there you had a gap on your side. And was there a loss in it too? Absolutely. Losses happen. They're part of the game. And but you see one thing: one winning, two winning, three winning, four winning trades, and a losing trade on the other end. So that's high probability trading, and we have more of those examples. So here I added an opportunity on the 6E, that's the Euro future. And you see here of how many of those opportunities are labeled. Was there a loss in it too? Yeah, absolutely, those happen. They're part of the game. Whoever trades need to be able to, first of all, comprehend that we work under risk. But when you have a system that produces so many more winners over losers, then you definitely have an edge. And you see we can do that on the way up and on the way down, and in that instrument, it doesn't matter where you click on the left or the right side, you'll always have the opportunity to participate in the price move of the underlying. And you see in a matter of basically 2 days of how many opportunities came throughout the day whenever you were able to sign in and catch on and latch on to that development. Yeah. So you see with the spool, we define how far a price move shall reach. And with the stop here, the crossbar that we put on, then you can put the relation between the risk and reward in a clear correlation and start your trade and position size. And we'll help you with models and our individual training to get you on position sizing right and managing your money so that you don't overdo on the risk. Yeah. This way, you always know entry, high pressure point, stop, risk, maximum risk, expected price move in distance and time, 3 bars we had here. And with that, you can get into the trade over and over. And when you want to see, I'll look at Amazon now before I go on. I can go live, yeah, so hope to see the chart. So I was just doing this. So look, it repeats itself. It's not that the charts are like just made for this. This I was looking at today. So here you had Visa. Yeah, after 3 bars you had to be out, 1, 2, 3. Yeah, so then you had the short opportunity, second bar out. This one was not ticked in because the next bar wasn't higher. So here you had a wonderful long opportunity out. And now we're gonna go jointly and look at at Amazon, and your question was, how do you choose today's situation? It only matters if there is a signal and if the signal gives a price move, and not day by day that will happen. Yeah, so Amazon. Yeah, so not day by day it'll happen. So let me zoom in a little. Yeah, so you saw the last signal was here, and you were supposed to be out, yeah, with a profit. So there was the signal, 1, 2, 3 out. And on today's situation, there is no signal. Yeah, so you wouldn't care about the further price development of Amazon because there is no signal on this chart. So here you had potential long, but it didn't get there. No signal on this one, but here you had a signal say, hey, go long with me for 3 bars, 1, 2, 3, or up to that target, and it reached the target. That was the most important thing. Yeah, so here you see it reached the target, ticked a couple of pennies above it, and then got yourself out. Yeah, but so if you are interested and want to see deeper of what I'm showing you here, but only take that if you're really meaning that to be part of this, then I'll be happy to offer you a personal consulting hour where you can call the stats. Yeah, so I want to see how that works, and I'll show you how it works out, and you and I gonna count the good trades and the bad trades and see if we are above our threshold of 65% good trades. Yeah, so we'll always teach one-on-one, because learning one-on-one is the best for adult learning. Yeah, sitting in a class, that's a different thing. We don't want to socialize. We want to give you clear-cut knowledge, expertise, and rules. And we want to develop with you a business plan for trading success, which entails clear-cut entries, clear-cut entries, stop and adjustment. So we help you to repair trades and moving yourself ahead into a different category of trading. Because if trading was easy, nobody would ever go to work. It's not easy, and this is why you need somebody. If you take us or somebody else, they're very good presenters all over here, but you need to have an edge, something that is reliable, repetitive, and high probability to move you ahead. Because when the components of trading come together, you have an edge, but there are many to consider. Let me put it on a chart. First of all and foremost, you need to have a system that gives you an edge above the 65% threshold. And not many do that. When you take standard indicators, they have a little positive expectation, 51 to 54%, MACD, moving averages. But when you then count your probability and also your trading costs, slippage and commission, you're not gonna be making it, yeah? And you want to have one thing, a trade finder will help you to have that too on board. Some on your system, some will give you reports, daily levels called NeverLoss trading alerts. So where you know, okay, Apple is hot, Amazon is hot, Tesla is hot, or some of the shares we puzzle together, and we prefer those that are easily repairable. Not every stock is easily repairable. It depends on the option chain, but we'll teach you that in our one-on-one learning, where you get everything documented. Every session is recorded, yeah, for your repetition. When you want to go through, okay, what did I learn? Then it's all there. We work on a platform with real-time data, so you have no extra data feed where we install it. And so that kind of saves you a lot of money over many other solutions, and we only act on confirmed price move. Why a confirmed price move? I'll show you a table a little later on. Because you want to be not the only one believing that that stock's going higher or lower, or that that asset is going higher and lower. So therefore, we always have that price threshold, buy above 100. So if the price of the next candle moves above 100, then we go in, because we are certain that we are not alone. And key will be, we show you strategies for all different asset classes. However, if you say, look, I'm only interested in trading those, we'll help you to do those at all kind of time frames, because you know, just one time frame, one tick frame is usually not cutting it. A little bit of versatility brings you as a trader and investor where you want to be. And with our systems, you always have clear-cut defined entries, exits, and stops. That's important. Yeah, never, ever have a system that doesn't have that. And we offer you the ability to upgrade. I showed you here a system today so far. It's called trend catching. I will show you a little bit later in the presentation, trade colors, which is our basic system. And we allow all our students who bought trade colors to upgrade, getting the money that they invested acknowledged to the upgrade to the next. So all of that together has to be in your portfolio as a trader, and in your learning portfolio, because the investment in you usually pays the highest return. And so therefore, if you invest very little and very little in knowledge, you go to a market where the ones who take the other sides of your trade are prepared. Yeah, and so to help you with that, we help you to formulate it in a business and action plan, so that no, this is when I trade, this is the asset classes I'll do, and this is the financial expectation I get out of it. It's a good exercise. Why do companies have a plan? To follow it, to have a fallback position, to stick to guidelines, to move things into the right direction. Yeah, and the question would be, why should that work? What's different? Look, the thing is, when the price comes out of a certain price threshold, other market forces see it, and we see it too. Our system portrays it on a chart and then calculates how far the price move shall reach. That's the algorithm that we use. And so with that, we formulate a target 1. And at that target 1, if it's reached, we get out at bar number 1, 2, or 3, or we close it at bar number 3, because then the market pressure isn't high enough. And this is how we focus and get you in a clear market pressure business. You want to trade where prices move, and you want the chart to tell when to buy or sell. Yeah, and so with the 3-bar target, you have a time-based target, and with the price target of the SPU, yeah, the speed unit, you have a distance target. And so I just put some examples together. 30-minute ES, yeah, target reached. Some of those trades you might say, oh, wow, we had a higher risk. Then you don't have to take it, or you'll take a different strategy. But mechanically put the opportunities on here and say, okay, so many are worked out, and you see one thing, we have more winners than losers. We are sticking to our above 65% rule. So what does it mean? 20 trades is a good way of looking at your performance. And in 20 trades with 65% winners, you should win at least 13. And that's important. Yeah, so now on a 2-hour chart, you see things repeat themselves. And that's important. These highlighted situations get you to target without getting stopped. And it repeats itself on longer term or short term charts. Yeah, and helps you to find your entries and to find your exits. Yeah, so like you see here, yeah, look, Tesla when it was on the way up, yeah, looking at the monthly chart, yeah, so long-term investment. And you can make that with a fraction of the money if you understand option trading and how to dimension the right position in your option trade, and also by the right time to market, and also by the right strike price. Yeah, and this is what we teach in our individual one-on-one sessions. With options, we are very strong. It's a NeverLoss trading delta force concept, how we call it, where we teach you how to do that, and also how to repair a trade if it goes wrong. Yeah, and as said, we have our basic system called trade colors. It entails all of what I showed you: clear-cut entries, exits, and stops. It trades on a 2-candle color combination. So you see, yeah, 2 blues, the high of the second blue has to be taken out in the next candle. That's when we trade. Or 2 red ones, and the low of that candle has to be taken out, and then we trade. So count the colors 1, 2, 3, and trading is for me. Yeah, you trade when the high or the low of the second candle is taken out. And you can also trend trade. Then we show you how to follow the direction. But at the beginning, we encourage you for the momentum trading, where you focus on continuous, easy setups and pull them through. So here's, for example, crude oil futures, where you see, okay, how did it pan out? So you see here, okay, there's the 2-candle color setup. Those orange boxes are added after. You will not see them on the chart. Yeah, so there's your setup. There was your goal. Yeah, absolutely, that was tradable. Yeah, and what are we looking at here? We're looking at a daily chart. Yeah, again, again, again. And over the course of 20 minutes, yeah, that'll work too, because you get the situation, the drop was there, the 2-candle setup is there, and bang, $400 come your way. If trading was easy, yeah, therefore you say one size doesn't fit all. We teach you all of this really one-on-one at your best available time, at your best available days. We include even weekend days, because that's also good for us, because we trade. Yeah, the usual times where we don't want to do a meeting is between 8:30 and like 10. Why that? This is the time when we put most of our orders in. Financial plan, action plan, that's all involved, so that you have some guideline and principle to follow. It's not easy to learn trading, yeah, so don't take it too easy, yeah, so there's not one key principle. You see, we put a lot of knowledge, expertise, and detail together so that you can learn, yeah. So specific entry, repetitive patterns, multi-assets, yeah, so that you're not tied into one asset class, high productivity, and one-on-one learning comes together. And so what I did here is also making you a little bit special offer, and then we can play around with some of the ideas that we shared. So trade colors and trend catching you saw. Trade colors is the basic system. You can upgrade from this one to the next if you're there. And so here you had your clear-cut entries saying buy with a stop and a clear-cut target. That is usually 6,997 plus tax, not usually, that's the price. And we'll make you a special offer here for 6,000 plus the tax, give you another hour of education. And our basic system, trade colors, is 2,497 plus tax, and we'll give you a special here for 2,400, no tax. We are use tax state, Florida, so therefore I added it on. One has to pay it, but we are willing to pay it here for you. Yeah, and we're adding another hour of education. It's an investment, we'll understand that, but we want traders and investors who are successful long-term. We're 8 years in business and will really help the good bunch of people getting to independence. What do you all get for that investment? First of all, you get server installed software. So if you buy a new computer, everything's going to be there, yeah, because it's on the server. And it is real-time data, and it's not on our server, it's on the server of the broker, and the broker is for free. That's nice, yeah, so real-time data for free. Entry, exit, and stop, always clear-cut definition of where you enter, when you enter, where is your exit, your positive exit, and where is your stop. We help you with position sizing models to gauge your money management and risk. Time in a trade, you saw 3 bars out. And risk handling, yeah, so how do we manage to not take excessive risk long term so that we trade with the odds in our favor or let things go? You will learn a lot about trade patterns with us. And with the business plan for trading success, you'll have a leading guideline that you can always go back to and see if you're sticking to your plan. So this is how we want to help you succeeding to turn yourself into the trader or investor you want to be. And so here again, our special offer for those two. And we can start basically always quick because we are not usually having 20 students at one day. We'll time it out, work with you, and we make each of you who signs up with us and come and take the opportunity to challenge us in a one-on-one meeting where you call the symbols and we jointly look at how many good trades and bad trades we have to move you ahead with your trading opportunities that you have and into your trading futures. So when you want to see how do you get in touch with us, call the office 866-455-4520 or contact at neverlosstrading.com, and you'll see that is real of what we do. Yes, so when we have here, like for example, the chart for Amazon, and we can put any investment tool in here and then say, okay, portray for me, for example, in the last opportunities, and let me highlight something for you here, where you saw here the CN, yeah, this is the 10-year note on a daily chart, had a short opportunity. So what in the world am I doing with that? Look at this. These opportunities that you see in here with an investment money of about $1,000, you make $1,000 in a matter of 3 days. Yeah, so that's what we are looking at if we get it right. Do we always get it right? No, but do we continuously have good trades? You see here, we continuously have opportunities where you can move along. Yeah, so and that's not a chart that we just made. That's a real thing. Taking it real for you on chart. So just having another question, but the thing is I have a hard time seeing here. Are there any open classes? Yeah, so there are open classes basically all along. We work it in with you. It's not a class where we say it's specific at 9 o'clock at that point in time. We have people whom we worked with at 3 a.m. Yeah, there were traders that wanted to trade the European session, and we're going to be up in there. Seeing the action when it's up there and following it through. There's others that say, I want to be a long-term investor because, you know, here I have to take my money out every third day. I don't have the time for that. Yeah, so, okay. If you don't have the time for taking your money out every third day, we can go into a weekly chart, and let's look at the environment here. So you see here, oh wow, what's happening with that? Nothing, because you know that buy signal wasn't confirmed. But do you see that sell signal? That was definitely confirmed and came home. Yeah, and this sell signal right now gets you also to a very nice target. Yeah, 2408 to 2385. That's $1,000 in a matter of 3 days with your investment of about $1,200. That's your holding. That's substantial. And you see, this is live here. We have nothing to hide, and we really encourage you to say, come on board, test what you have. And the questions always come to me, can I test run it? You can test run it with our help. So somebody will be with you, guiding you through it. But you can test run it on your computer because you need the proper education. Call it like you might be a good car driver, but giving you a space shuttle and say, okay, launch and land it, that might be really difficult for you. So therefore, we focus with you and we work with you one-on-one, helping you to find the opportunities. Yeah, we got the NeverLoss trading alerts, our kind of fish finder, trade finder, to help you to see, okay, the opportunity is there in the CN, the opportunity is there in Tesla. So it lists them all out and says, okay, it has a trend initiation signal, a trend continuation signal, or according to trade colors, it has a trade color setup, and with that gives you the opportunity to invest on multiple time frames as a day trader, a swing trader, or a long-term investor. If you have further questions, I'll be happy to answer them when I see them on the chart here. It was just a little tiny here. And else, I hope I could inspire you to take trading as an opportunity with a clear-cut, measurable, mechanical system. Clear-cut entries, exits, stops, price adjustment. You need to learn how to hedge. If the thing goes wrong, don't lose 100%, reduce it and only lose 20. And this is why we call never loss trading, never stop loss trading, because we like to repair the trades. When they go wrong, we promise you high probability trading. We can't promise you 100% trading. Imagine what the price would be for a 100% trading system. Nobody can promise this one, and we don't, but we help you to deal with your losses, and we help you to find more winners than losers consecutively, and we've proven that over a lengthy period of time. Look at it, we are turning into 10 years in business, and we work one-on-one with people, helping you to turn yourself into the trader that you want to be. At that point in time, again, I want to thank the hosts for giving us the opportunity to present here. I hope you took some notes. As the listeners to this presentation, I was able to inspire you, and I wish you Merry Christmas and a Happy New Year if we don't talk, but we are here between the years. We're happy to entertain a session with you, and we are happy to start our education with you if you are ready for NeverLoss trading and trend catching or the trade colors, and there's other opportunities with other systems where we can talk and find what suits you best. So thank you very much again for the opportunity, and thank you very much for all listeners. And with that, bye-bye.